the overall market is also pretty okay. But Gautam, how high would you rate the chances of a breakout or a crossover above 3,500, the level of resistance that we're dealing with now? And if we manage to do that, where could this intermediate uptrend lead us?
Well, firstly, I think it's not going to be easy because for the first time in the last 4 weeks that you've had about 6 to 7 technical studies telling us that 3,500 is a problem, 11,300, 400 is a problem. But in case we were to really take out these resistance levels, in the next 1.5 weeks, then I guess the next stop for the Sensex and Nifty is clearly 12,500, which is very obvious level. A lot of market participants might be watching, and on the Nifty it would be about 3,850 to 3,900. So that is a possibility, but then I'm forced to believe after 6 consecutive weeks of gains, the market requires a cool off, and therefore our strategy is to really book profits at current levels with an idea to buy back lower.
There has been some analysis into the internals of the market, Gautam, i.e. the fact that the breadth has been more or less stable, that volumes or participation have picked up quite a bit in trade. How would you read those 2 points?
Oh yes, I think that is something which is very important. Volume activity has been phenomenal in the recent past. You've had excellent market breadth with the mid caps and small caps outperforming, and we strongly believe that the worst is over for the mid caps and small caps, whatever the Sensex and Nifty do for the rest of the year. So the idea is to really concentrate in them because that's a sector where you could actually get supernormal returns over the next 6, 12, 18 months, and therefore concentrate less on the Sensex and on the Nifty. But then, having said that, in the last 12 to 15 months, every time the market has seen a rally, you have seen a decent pickup in volume activity. You have seen the breadth, picking up quite well, and things can change quite abruptly. So I would not give it too much importance. What I would give importance is crucial resistance levels where we are right now, and therefore I think this week would be very, very important. Another point, I think. If you track the bear markets of the last 20 years, October and May, these are the 2 months which have a terrible track record, and we all know what happened in October last year, and we are very close to the month of May. So once again, I would be a bit careful for the month of May because we study the track record of the last 20 years, and 90% of the time, if this indeed is a bear market, and if this indeed is a bear market rally, then May might just be a month that could really spoil the party for the bulls.
So what's your own analysis of the point that you raised? Is it still a bear market, and is this a bear market rally, or have you seen any technical evidence that that picture may have changed?
Well, the technical evidence is not there, Udyan. I think last October, when we somehow managed to pick the bottom in the last week of October, you had just about every technical study telling you that the market cannot go too much lower from those levels, and the risk reward was excellent. But the rally that we saw from the first week of March, you have a few technical studies still telling you that the market requires a new low before it actually bottoms out. So I would be a bit careful on the index and on the large caps. But as I just said, 75% of the market could have already bottomed out, which includes the mid caps and the small caps, and therefore one should concentrate in that than really concentrate on the Sensex and the Nifty.
Thanks, Gautam, for stopping by this morning with your thoughts. That's the view on the technicals. Market's been